Continues to be down 52 points lower, but it's not exactly breaking out or breaking below support levels either. In fact, there's a bit of recovery, attempted recovery from the lows. With that, let's move to another important development that came in from the RBI. The central bank has released a draft circular on fair lending practices, penal charges in loan accounts. Ritu is here with more details. Ritu, this was something that the RBI, I think, mentioned in the policy, not this one, the previous one, to kind of streamline the system in which banks are penalizing people for defaulting on their loans, right? So what is the latest and what does this circular say?
Well, absolutely. That's what RBI is trying to do, because it's pulled up banks and other lenders for instances of overcharging borrowers in the guise of penal interest rates and levying divergent charges across the system, and thus come up with a draft guideline on these charges to protect borrowers and bringing in a more consistent policy of levying these charges across various entities. So these draft rules, they emphasize that the interest rates on credit facilities and conditions for resetting the interest rates will have to be strictly governed by the relevant authority or relevant regulatory instructions that have been issued by RBI. It prohibits lenders from introducing any additional component to the rate of interest and says that penalties cannot be used as revenue enhancement tools. So far RBI had given lenders autonomy to formulate board-approved policies and levy penal rates of interest, but given recent instances of overcharging leading to a lot of customer complaints, it has brought in these new rules. Importantly, these do not apply to credit cards, which is again positive for banks and card companies. Now, these draft rules also say that the levy of any penal charges cannot be in the form of penal interest. It has to be called charge and not interest, so there's a change in nomenclature. And there should be no capitalization of these, that is, you can't charge compounded interest on these charges. It also says that the quantum of penal charges will have to be proportional to the default or the non-compliance with the terms of the contract beyond the threshold, and that threshold cannot be discriminatory within a particular loan or product category. Now, banks will also have to lay down a clear board-approved policy for formulating these charges. As far as the impact is concerned, for banks, it's a relief really, because there's no one-size-fits-all penal charge which RBI has prescribed. It is still up to the board, but there could be some loss of income in instances where there is an incidence of interest rates being charged on penalties, and the impact, however, should largely be manageable for banks, according to various industry experts.
Okay, thank you very much for that important update. We'll slip into a very short break. When we return, we get you a special deep dive into India's air cargo market as a part of our special segment, Clutter Breakers.